Good afternoon to all our MMTs and our traders around the world. Today's date, 1/10/2014. Why are we short Netflix and long Yelp? Nflx short, YELP long. Called a pair trade. So, Netflix has done extremely well since last year on this weekly chart, as it has. We have had it. We bought it long. It had great quarterly earnings. They turned their business model around. Here is where the big problems happened back in 2011. Boy, what a great move that was down. But now we broke up here. Even on the earnings, in the last quarterly earnings, Netflix had a big gap and then it had a big reversal. So I will take the 213 lows right here, right over here. So let's make sure everyone can see it. Now what we're going to do is go back in here where we know that Mr. Icon owns a big stake and he sold half of it. Now, this is the 2014 January effect. We came up when we had that last quarterly report back in October. We gapped and we sold off, and this is a weekly move. Now, here's the key is the reason why we had to stay net long was that I'm just going to draw a little horizontal line right in there. And let me just show where this weekly breakout was. Okay? And you can see here that on this particular chart, on the weekly level, and I'm going to show here this this area right here, and how it had that ascending breakout on a weekly 5-day level equals a weekly. Now, why is it, or why were we buying put options on Netflix? And Netflix had come, remember, that was last quarterly earnings spike. They come up, they rally into it, and 2014 is starting off very bad for Netflix on a weekly level. And basically, this is how the stock is trading. This stock is going to go down below $300 a share. And yes, we're going to be doing another round of entries, meaning that we are going to go in and we are going to continue to short this on an intraday level. Here is the biggest challenge for Netflix. Listen, Netflix closed and fell below the 200. We're going to show you on the daily what that 200 looks like, but on the weekly level, this blue line is called a weekly moving average. And that weekly moving average, the 10 weekly moving average, is at 356. Well, today's close was 332. When we fell through that MMT, that was a great short to the 20 week. I'm going to draw a trend line. The red line is the 20 week MMTs. Now, why is Netflix, like we said over here, the party was over. Okay? It had the year end great rally and bull rally that Netflix was in. And what a great run it was. Beautiful run up off of those bottoms, but back in 2011, it had a great reversal. Fundamentally speaking, there's going to be a lot of people getting into space with Netflix. Amazon is one to mention. Apple's going to be another. There are other people that are going to go into the streaming video marketplace. What we are going to say is that fundamentally on their subscription model, which is right around 30 million people, is if you don't go any higher and if they do any price increases, that's what killed Netflix back in year 2011. And it killed it right here. We traded it all the way up there. What a great move down on a weekly level. We found the bottoms in calendar 2012 and it consolidated there. But listen, from that lower end of that consolidation, we had one of the greatest rallies that we have seen in Netflix in a very long time. And not only that, it's a short. You can buy puts, you make money going down. Now, let us show you something else. On the daily chart of Netflix, this is a daily now, one of the things that we're going to show you is that daily bar was the quarterly earnings there, and it sold off hard. So let us blow just this part up right here, and you can clearly see that wall of resistance. You can see where the pullback days were narrow range, and the real move was right here where that trend line is on a daily level, and that as we started out the year on a narrow range, meaning that Netflix had no more gas in the tank. It couldn't break through it. And you always want the resistance to be at lower highs. So as they are. Now, having said that, I can tell you that the 50-day moving average, we'll talk about where that is. But now we're going to talk about that the 50-day moving average that Netflix started with the gap down. So let's blow this up, MMT. Okay? Now, we love 2014, and we still love Netflix too. Don't get us wrong. Just that Netflix is not viable. It's shortable only, making money to the downside. Now, when we talk about the 10-day moving average crossing over the red line, we crossed over. That's very bearish. When you start a gap down and you take where that gap down is and you take a look where this starts right here. I'll blow this up again on the daily level. Now, let's take a look at where this trend line was, but most importantly is the high of the body here. And that, once again, you can see the diagonal reversal here. It's not, this is a descending value. And let me tell you that this yellow line is a 100-day simple moving average at 329.92 cents. And I will tell you now that you have broke and sold down, gap down below what we call a 50 simple day moving average at 353.17 cents. Not only that, I will point out to my new MMTs, once again, why was it a great short? Look at here. Look at the 10-day simple moving average crossing over. We call that a death cross in a lot of ways, between the 10 and the 20 on a daily. And not only that, this blue line is a 40-day moving average. The stock is broke. That means that on a daily level, that this is shortable every day until Netflix finds a bottom. With the quarterly earnings coming, we will tell you the following. With our new trading staff and the people that have been short, and we love this position, remember, markets are wonderful, and they are. And here's why. Here we go. We invite you to click on the free trial tab. We do. We invite you for 5 days with us during live market hours, getting those entries before they reach the price and getting the exit before they reach our targets. Not only that, if you want to open an account, go up to trading, hit open an account. You deserve to be in the next bull run, and you deserve to take opportunities that we have to offer you. You click here, listen to the video. You want to open an account? Click open an account. Yes, we'll fund your trading account. Yes, get started today. Yes, watch the pattern day trading rule. When accounts are at a traditional brokerage firm and you have less than $25,000, which does not buy very much in the market today. Markets are expensive. Yes, you can take advantage of what? The buying power that we are going to give you. That means that when you open an account, if you have a $5,000, we're going to give you $50,000 intraday. Not only that, if you take the monthly training and you pass our test, we're going to let you trade a $50,000 account that we will assign you. You do not have to put up the trader deposit. Once you complete our 30-day program, we will give you a $50,000 account at no expense to you to get involved right now. And that's very bullish for you. And yes, we will have a very long lasting relationship. Once again, we have lots of trades in here on Netflix, and here's what we're going to say now. And this is a very special event. Now, everybody, here's the special event. 2013 started out great for Yelp. However, as we are doing from a risk management point of view, is that we are long Yelp. So basically, when we started out 2014, Yelp was a long position and Netflix was a short. So when you're long the Yelp and you're short the Netflix, and as long as Yelp is continuing to break out and performing like Netflix once was, we have a technical breakdown on Netflix. And we have a technical breakout to higher highs on Yelp. And yes, it is exciting. And yes, it's exciting for you to know the difference of the 10 and the 20 going up in value, ascending, and descending value, which Netflix is broke. Netflix goes lower to the $300 level, there will be a pit stop. That will be the second leg down. When the 10-day crosses over the 50, every move to resistance is a short, and every pullback on Yelp is a long position. Yelp has got a very, very powerful uptrend. Not only that, Yelp has 11% ownership. BlackRock owns 11%. JP Morgan is behind Yelp. Yelp, as it stands right now, as long as the fundamentals come in good on Yelp, it's the next greatest bull run that has started off January 14th. And not only that, the great bull that was here has a great pullback, and this is a 100-day moving average on the daily. All right. So, once again, it's how I do a short on Netflix, and I'm long here. So if I'm long here making great money, and I had to come out of here and say that Netflix started to go up, I couldn't lose money, because as long as my long is working, and if I have to cover and get out of my short, that's fine. Now, I've got a winner to the upside, and I've got a winner to the downside, and I care about you getting involved. It's you who deserves to get involved in this next bull rally. Yes, you do. Take that free 5 trial today.